Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Brayden Sutton with us. He's an author of a book called Money Mind Beyond Speculation, as well as a CEO for the BC Bud Corp with the symbol BCBC on the CSE. How you doing today, Brayden?
I am awesome, Kier. Thank you so much for having me.
Hey, thanks for agreeing to get on. I know you're busy with everything that's sort of going on, but a couple of weeks ago we were able to catch up in person. It seemed like quite a while since we've been able to do that. Anyways, I was really intrigued with some of our conversation, and thanks for agreeing to kind of get some of it on camera.
Yeah, thank you. I've been looking forward to it. It was great seeing you and been looking forward to the chat here. So appreciate you making time for me.
Yeah, and I guess besides being an author and having a book that people can go and purchase on Amazon and go and download on Audible and other places like that. I've been listening to it. I made it probably halfway through in preparation for this. It's great. It's something that everybody who's a speculator and investing, whether it's large cap or small cap, really should go and take the time to read. You put some great stuff in there. But in addition to that, you also have a new newsletter as well on Substack. What's that called, and how do people find you?
Yeah, thank you. I do have a shout out to Tommy for encouraging it. Tommy Humphreys, mutual friend. It's called Brayden Sutton's Beyond Speculation. You can find that on Substack. Quite excited about that. I did run a newsletter quite a few years back and then got kind of preoccupied on the biz deal flow side of things and kids and all the others. So I'm very excited to be back. I think that's one of the most rewarding things you can do. I certainly enjoy the art of writing and the practice of it and covering things. So it's very much something I'm looking forward to over the coming years here.
Excellent. Well, maybe we can unpack a little bit of that here today. Before we get too far, maybe you could tell us a little bit about your background, how you initially gotten started in the capital markets and in business in general.
Yeah, certainly. Always been a student of the markets, always been really fascinated by the stock market. Didn't have anybody in my family that was involved. So naturally, I took to books and waking up early and listening to CNBC and always had this lifelong sort of fascination. Like, what is this? Why are all these successful people talking about stocks? So one of my very first jobs was in tech for Suncor. And during that tenure, I remember the executives always walking around and all they talked about was their Suncor stock. So that really sort of captured my imagination. And from that, I really became a student of oil and gas, kind of prematurely learned the futures market, started trading options of Suncor, really kind of embedded myself into the capital markets, really just on my own. I've always had a love for gold and silver. So Vancouver, of course, is a hotbed, globally recognized for resource exploration and funding of mineral companies. So I actually ended up playing around at golf around 2005 with a dear friend who's since passed, who had a little gold company. I remember he handed me his business card and I looked down and saw this ticker KGC and went, "You have a public company?" And just was, almost starstruck. And essentially he took me a little bit under his wing, learned a little bit of the Corp com side of things, learned a bit about IR, had a bit of a tech background. So I had a cognizance of everything from, MailChimp to running social media accounts. So I was of use to him in that regard. That love of gold and silver, fast forward into 2012, beginning 2013, a little company I had called Supreme Resources actually announced an RTO with wanted to get into the medical LP business back in that era. And I literally just went down the bottom of the press release, picked up the phone, said, "Hey, I know a little bit about the space. I'm a shareholder," and really just sort of embedded myself, went to networking events, asked a lot of questions, remained very, very curious and got a hold of guys that I knew were doing it and just wasn't afraid to look for opportunities and made myself of service to these guys. Always was kind of as the medical MJ market was heating up, I was a student of that and actually had a federal license to use it in 2004. So those two worlds, as they combined, I was a bit of a hot commodity for a little while, which led to the creation of Supreme, and then spent quite a bit of time with Aurora, and then Origin House. So really kind of cut my teeth in those companies, spent quite a bit of time down south, and now full circle back really to managing a portfolio, primarily gold, silver, copper. Big fan of oil and gas, uranium, other things, but really it's been a 20-year journey of just being a student and just absorbing as much as I can and connecting with people like yourself that have a love for it, and it truly is a lifelong journey. So yeah, something I'm very passionate about.
I know you're a big fan of silver. You own some physical silver. You've been sort of a big bull for sort of silver, as amongst other commodities. But that's one that I see that you sort of talk quite frequently about. It's obviously getting a little bit of a moment here. What are your thoughts, sort of, on the silver space?
$27 today, man. It's flying. It's overdue. It has this. I would encourage your viewers to look up something called the gold silver ratio. So as gold keeps getting kind of pushed up as governments behave badly, there's this ratio with silver and gold, which is about 90-1 at the moment. So I'm incredibly bullish on silver. I not only love the fundamentals from the industrial use, from the need, from electronics to solar, etc., but I love the disconnect because I'm a gold guy, and I love the fact that because gold's not going to have anytime soon, it's not going to come back to $1,000 or even even lower than that. That tells me that silver has to double and triple, and I think it will. So I think in our lifetime, this $27 an ounce silver, it's not only the only commodity. It's a true story, and it's kind of funny to me. It's really the only commodity that hasn't really appreciated in price since 1970, if you can believe it. Inflation adjusted, it's about the same price. So I think there's a big spread between the current COMEX spot price, the fundamental real price, and I think where we're headed. I think it's a great commodity. It's useful to me. It's shiny. It's pretty. Lots of reasons to like silver. So I'm a big fan. It's been sort of God's money for over 5,000 years. It was always the common man's money. Kings had gold, and the commoners traded in silver. So I definitely have a strong attachment to it for sure.
Well, when I was up and coming in the IR business, and you sort of got involved in the markets, you've always been known as being a very very successful trader, somebody who was very successful at managing their own money, not having to rely upon brokers for deal flow. You kind of talk about some of that stuff in your book, which I found really sort of interesting. How did you sort of get involved in sort of that journey of actually sort of speculating on small cap companies?
Yeah, you know what? I think I truly enjoy the mechanics of trading. I think for me, what I always, kind of found really the most compelling was I used to say to myself jokingly, if I could come out of a coma with my MacBook and $100 in a brokerage account, I could probably figure it out and do. In other words, me in the market and a brokerage account, and I can sort of find opportunities. So I love the fact, frankly, that when you're a trader, it's you and your instrument. There's no third party. There's no inventory problems or staffing issues or logistical issues or asset issues. Or it's to me one of the most purest forms of capitalism. I love I love the mechanics of it. And most guys in our business, they have relied on full service, and we all need full service brokers. They're phenomenal function, an important function of the biz. But for me to go in to an account, click stock and see it and own it, and then a month later, if I want, go ahead and click and be out. I just think it's such a pure form of capitalism. It's like everything you love about real estate, but it's liquid at the click of a mouse. There's millions of instruments. You can trade all over the planet, 24 hours a day. I just think it's really cool. Maybe I'm an old merchant at heart, but I love putting away junk that nobody cares about for a while, and then as the masses hoard in, just feed it back and go, I was here a year ago. Nobody cared then. Now you can have it for 3 times the price. So it kind of goes back to me with just having a nose for where the puck is going, I suppose. And then the power to go and execute and take ownership of it. I think it's really special. Or even to go and say, I'm going to, buy 1% of this mining venture and doing it quietly at home. I think that's just so cool to be able to do.
So what do you do when you're not trading stocks? I know you're a little bit of an adrenaline junkie. Would you mind sort of sharing a bit about what keeps you busy besides trading and your family?
Yeah, 3 teenagers will keep anybody very, very busy. My kids are all quite active in their jobs and with their sports, so that definitely eats the bulk of it. I've been a lifelong motorbike guy, dirt bikes, sport bikes, and Harleys and everything in between. So I do love my motorbikes and mountain bikes. Love the game of golf. I would say I'm a total addict and always have been. So that certainly occupies a lot of my time. Being in nature in general, travel, like to spend time up at the lake with the family in the boat, and anything where I can just sort of connect with nature. I have done quite a bit of flying too. That goes back to the adrenaline side. I'm definitely one of these guys that needs a little action in life, but yeah, I've got a lot of really cool hobbies. Not a lot of time to do them, but with kids nowadays. But yeah, it's no shortage of hobbies, that's for sure.
Yeah, when we were chatting, you were telling me about some of the exploits there, learning how to fly a helicopter, and sounded pretty wild. So very very cool stuff. But I'm sure your family likes you solidly 2 feet on the ground. Maybe we could turn some attention to your book, Money Mind Beyond Speculation. The intro in it really like hooked me.
Hmm.
It's a pretty wild intro, I got to say. You talked about how you lost, 1.7 million on a single trade, and then how you lost 25 million or left 25 million on the table on another deal, because you didn't want to sacrifice or give in
Freedom.
your sort of integrity and
Yeah.
autonomy. Um, I've always known you to be a very highly principled individual that don't sort of compromise, as well as a flair for some high adrenaline. Can you share a bit more about the book and like how you like what made you want to write it, and who should be reading it?
Yeah, and thank you for bringing that up. The book is something I've funny enough and truthfully been writing for about 20 years. The last 10, I really put it together, and then during the COVID era, I really wanted to kind of have something to show for, but at the same time, the impetus or the reason that I went out and actually published a book was, if you remember the GameStop AMC mania, I really saw myself in those 19-year-olds on their iPhone trying to get something for nothing, fueled off FOMO and greed, and really sort of treating the stock market like a lottery ticket, I guess. And so all that to say that, I've had some amazing mentors. I think I've probably read hundreds and hundreds of finance books. So what I wanted to do was essentially say, because there's a good process when you write a book, and what it is have an avatar, of course. So have somebody you're writing for. So I had a really good mentor who said, write this book for your 18-year-old grandson. So essentially, I went back to the drawing board and I said, if I could hand this book to my 18-year-old grandson and say, look, I blew my brains out in my 20s trying to chase everything, trying to make money for nothing, trying to just, the fast way. There's no shortcuts, as you know. And if I could help somebody avoid all of that turmoil and all of those losses and just get right to the part where you become an investor. So while I've always been a trader at heart, I am a fundamental investor, but I do separate those two camps. So I speculate on things, I invest on things for the next 500 years, meaning I have no plan to sell those things. So really, the book was an effort to identify, where did I make money in my journey? Where did I lose money? Why? What drove me to make it and to lose it? What differences did I do? How did I make a bunch of money and then give it back up? How did I allow people pleasing to interfere? How did I allow ignorance to interfere? And then to go one step deeper, I was really fortunate because I had a father, and I had these two sort of male characters. I had a grandfather who had a very humble income his whole life, retired military man. He ended up retired quite wealthy, all things considered, a couple of homes and an airplane, and had a phenomenal life. Never made a lot of money, never cared about money. Money to him was always fuel, so he never worried about it. He always had it. It was just go juice. His son, my dad, made a ton of money, made $250,000, $300K a year as an air traffic controller, never had a penny. So the difference being, one of them really had this sort of poverty mindset where money was always sort of sand falling between the fingers. And as a result, it just never seemed to be there. He actually died with nothing at only 52. So I was 19. So what happened was I really sort of, had a lot of time to think about the man's relationship with money. A lot of guys end up very, very wealthy that don't seem to try. And a lot of guys work so hard and never seem to have anything show for it. So I really just wanted to sort of dissect that for myself. And as I say, you teach, or you write to learn, not to teach. So I learned a lot in the process. I had a lot of great help. I think it turned out to be a great book. And yeah, it's, when you flub one trade and you lose over $2 million literally in front of your eyes, it's traumatic. And I don't want anyone to go through that. I don't want to go through it again. And if my shameful stories can help someone, then I, and I will say the book has had truly tremendous feedback. So I'm deeply humbled that it really sort of touches the guys that get it. Guys like us that understand this business. They really understand the principles in it. But yeah, just sort of regurgitated 1,000-year-old wisdom about money and how it flows. And when you rent shares in a company just because you found out about it on Twitter today, versus investing in a business that you want your grandkids to sell in their lifetime, like dynastic investing, those are two ends of the spectrum. And I just think it's really important for investors, I'll use that term, that when they're buying Bitcoin or buying their first home or speculating in copper, that they understand what they're doing, why they're doing it, what their goals are, and what they're going to do, A, if the stock goes up, and B, if the stock goes down. I think that's the biggest question to ask yourself is, I just bought a bunch of crypto. You go, well, what happens if it goes up? And they go, I don't know. Well, what are you going to do if it goes down? I don't know. I go back to the drawing board. Like, don't, paper trade first, right? So I, in essence, I gave up a lot, and I'll finalize it by saying that when I started trading stock, and this is very embarrassing, but I literally put $1,000 in an Interactive Brokers account at 18 years old, right when I could open the account. I sent it to zero in days. I did it again and again and again, probably over 50 times, like a pensioner sitting at a slot machine, just feeding hundreds, wondering why am I not getting this figured out? So I figured out weighting, understanding allocation sizes, understanding that if a professional gambler walks into a casino with a $100,000 bankroll and he only wants to make 10K, he only needs to make 10%. It's base hits. Whereas the amateur walks in with 10K, goes, I need to make 100,000, he loses it all, right? Those are two fundamental different mindsets. So just ensuring I'm on the right side of the table and that I'm respecting the game accordingly so that it doesn't hand my ass to me anymore.
Yeah, that line sort of stood out for me in the book about the 100,000, the pro who's got 100,000 looking to make 10, and then you've got the amateur who's got 10 looking to make 100.
Yeah, I mean,
also another one that cash is a position you repeat over and over again, and kind of
cannot stress that enough. I can't stress that enough. People say, I get WhatsApp messages every day. They go, I have 10 grand. What should I do? I go, I don't know, make it 20. Look around, shop around. There's nothing better than having cash. Cash is choices. When you deploy the cash, you're now deployed. Now you're losing sleep at night because you don't know if you made the right decision. So never be afraid to have cash. It keeps you in a position of optionality. Cash is a position. I wish more people understood that. Cash is what allows you when the market crashes to step in and make money immediately, because money is made when you buy, as you know. It's not made when you sell. So cash allows you to act when others are running out the door the other way.
Yeah, so your book is kind of chock full of like some interesting stories. I love books like that where it's directly sort of relatable to, the author. They're writing about something that's like deeply personal and they mix in some of their own personal stories. So appreciate that. What's something that didn't make it in the book? What's the wildest story that you can share with us?
Oh man, that's a really good question. What didn't make it in the book? I guess there's so many stories of going in and buying somebody's stock because they did their job and found me as a listener, as an engaged recipient, as a retail investor. And I went in and tried to be a hero and tried to buy a bunch of stock and bought it off the offer and got a real high cost basis and kept buying as it went down and continued to spend weeks and months and years of my life supporting something, all because I greedishly or piggishly went in to make a quick buck, to people please someone else or to be a hero. There's just countless stories like that. And I did share one of them in there. But that's a good question. That might have to get back to you in another call. There seems to be so many.
Yeah, no problem. You often talk about your people pleasing in our business that can really get taken advantage of when people are like nice and want to help. What have you sort of done with that over the years to make sure that you don't get taken advantage of?
Yeah, well, that's a good question because, as a kind-hearted, sensitive person, you're an easy target, because when you're a receptive audience for somebody that is a salesperson, or a homeless guy walks by you and asks you for something, if you stop and turn, now he's got you, right? Now he's got something. He's gonna leverage that. He's gonna use that. And if you can't show boundaries and assert yourself, so I guess it's a business where you have to be very, very assertive. You have to be brutally honest. And if there's somebody that you want to either impress or do good by, or let's say there's a mining executive that's up here and he asks you to buy into a private placement, you can't afford it, but you do it anyway. These are all things that are going to end in disaster. So truth and transparency is always the right move. And when you are a people pleaser type, you get taken advantage of in the markets. I heard a funny quote that, all mining executives are the nicest people in the world. Why? Because they always need everyone else's money, right? They either need you to go into their stock or they need to raise money in a placement. So, it's no wonder the capital markets has so many cool networking events where you can go and meet all these amazing CEOs, and they're so friendly, and you hit it off, and next thing you know, they're hitting you up every 24 hours following up for an order. So don't let your kindness become an order. I love how Ray Dalio always says that he says no to everything all the time immediately, because you can always say yes later. Words to live by. And really just, that's just it. Like asserting yourself. And if you don't feel good about something, just say, look, I want to, I'd like to, I like you, I want to help you, but I just can't right now. Who won't respect that? And if they don't respect that, they're not someone you want to do business with. So if anything, it's a good test to say, hey, I really like you, I like the opportunity, but it's not really good timing for me. And if they respect you for that, that's somebody worth continuing the relationship with. But for a really long time, as a young guy trying to grow my business and my family's net worth and just trying to make my way, you often end up lighting yourself on fire to keep other people warm. And that's a surefire way to end in disaster.
Well, maybe that's a good transition for us. Maybe we can talk a bit about how you ended up directly at the front of the sort of legalization movement, the rise of the LP, both in Canada as well as some of the stuff you did in the US. Would you, could you explain a little bit how you got involved with companies like Aurora, Supreme, 1933? How'd you get involved?
Yeah, certainly. I ironically enough, back in 04, actually when the dad that I mentioned passed away, my physician gave me an MMAR, one of the coveted MMARs to consume medically. So I actually had a federal license in 2004 to consume. And there really was only a handful. There might only been 10 or 20 people across the country that had it. I certainly was the youngest. So as a result, I started blogging. I actually started writing and did it at cannabishealth.com, which was a blog that I had purchased. It was actually a journal originally, and then I took my writing online. That got me introduced to a lot of physicians all over the world. 2008, 2009 saw the very first US listed companies on the OTC. I then actually I'm most proud of this. I got a name for myself on Twitter in 2009 for first calling out the first scams. They were essentially pot stock scams. There were guys saying that we're going to $1. I'd pull up all the details. It's a billion shares outstanding. I'd go back to Twitter and I'd say, this CEO just said the company is going to $1 and it has 1 billion shares outstanding. And everyone's like, what does that mean? And I'd say, again, stop trading stock. So really was one of the first analysts, you could say, in 08, 09. Ended up getting hired by a guy named Alan Brockstein in 2012 for his community 420 investor. So I was the first hire on there for about a year or two. Fast forward to 2013, Supreme had happened. I sort of somehow found myself in as the exec VP. I was a shareholder on the shell side. I was an advisor and consultant on the asset side. So I ended up there for the first year and a bit, raised a bunch of money, introduced them to really this retail audience. At the time, I really had kind of a retail army, to be honest, in the pre-Reddit days, through a site called Stock Syndicate, you might remember as well. So I had a really successful newsletter back then. So I got kind of sucked into the deal side, 2013 into 2014. From there, it became mania, as you recall. So we had in Kincardine, Ontario, we had the world's first big hybrid greenhouse. It was 370 or 360,000 square feet, hence the name 7 Acres, which is a phenomenal brand, thanks to John Fowler and his team. Ended up getting an offer from a wild man named Terry Booth, a little bit into that, who was building the world's first purpose-built facility in Cremona, Alberta. So I thought, well, this is where the puck is headed. We've got greenhouse, which is a nightmare. He's got purpose-built. This is what we need. So I ended up raising about $45 million right away through all my contacts in the banking world I had just met in the last 2 years for Aurora during that prescient mining RTO with Mark Levy, if you remember that name. He had the shell, Terry had the asset. I, again, was right in the middle, so I became the director of biz dev and really introduced my audience now from Supreme to Aurora. Another year went by, and then started to feel that Canada was really, really oversaturated. We knew this early on. So I teamed up with a guy named Mark Lustig, who's just another absolute legend in the space. He knew that California was heating up, so he had a little company called CRHC, went down to LA Valley, acquired a company called River Distribution that became Origin House. Inside of 2 years, Mark ended up selling Origin House for like 1.1 billion. Supreme ended up selling that same year, 2019, for about 454 million. And Aurora, of course, became quite a unicorn. So those three were very proud. It was 3 for 3 amazing brands in the space. And then I shifted over to Las Vegas. The next frontier was Nevada. 2017, it was going fully legal, had a medical market. So a group of us ended up buying the very first medical license down there, turned into a rec license called AMA. AMA ended up merging with another little Vancouver shell through a guy named Stadnik who had Quick Flow. So really finding myself in these really interesting places and times where they bolted together, and RTOs are fascinating things because they rarely work well. When they do, it's beautiful, but they're extremely hard to pull off. And so 1933 came to be. It was actually called Friday Night Inc. I always hated the name, so I ended up renaming it to 1933 Industries. Just put out a press release yesterday. It's the top 5 brand in Clark County. They're just doing phenomenal. Paul Rosen has done amazing things there with Esther. So yeah, did my time in Canada. I spent a lot of time in Seattle, Portland, and then LA Valley, and then to Vegas, and then kind of full circle back to Canada, where I thought, I've seen everything in this space. I know the licensing model works a heck of a lot better than agriculture / processing, trying to be the creator of the product, but rather you want to be the front end brand that goes out and gets the shelf space. So that ultimately was the genesis of the BC Bud Co. with Mark Lustig and Josh Taylor, was to have a purely white label brand, focus on the house of brands, focus on that consumer experience and the bud tender order, because at the end of the day, anything can be in the packaging, right? It's about the consumer trust, the experience. It's about having value at the price point. All these things that are really hard to kind of, boxes that are hard to check, we had a good understanding. So that's where the genesis of BC Bud Co. was really a white label only contract manufacturer business where we can remain dynamic, go coast to coast, go anywhere, frankly, with the brand, but allows us to put out cool new offerings that are value adds to the space and not be burdened by these, like 1933, we built a 75,000 square foot facility in northern Las Vegas, right next to Nellis Air Force Base. And man alive, if I were to tell you the amount of daily struggles with having a building that size, growing this plant in the desert, in a federally illegal environment, and doing so as a Canadian, shaved years off my life without a doubt. So I took everything I loved about the industry and where I knew the value would be and thought, you know what, we want to be nimble, dynamic, asset light, focus on brands, and that's kind of where we are today. So.
Yeah, maybe you could help explain. So you're CEO for BC Bud, and maybe you could explain a little bit about the company. I was just like looking up its financials ahead of the call. So maybe you could explain how you position the company. I know you touched on it a little bit, the white label, but what type of products, where you sell them, how you see the company sort of growing.
Yeah. So again, House of Brands, it's a formative company. It's still very, very small. I like to almost consider it as a well put together, well structured cannabis vehicle or even shell, purely from a sense that, while we're not a proxy on the space, we're definitely a good, just sort of an indicator. So if I back up and say that, a lot of the peers right now, the LPs in Canada, a lot of them have achieved incredible sales figures. Like there's a few in BC here that are now, upwards of 2, 3, 4 million a quarter top line. They're all losing money. So sadly, it's not a business that gets more profitable with scale. It just doesn't. So as a result, what we wanted to do, what we've achieved, frankly, is we've got 30 individual SKUs that are ultimately test SKUs because nothing is permanent in this space. If I've learned anything. We have 5 different divisions. So we cover the high-end edibles, we cover the vape carts, we cover the infused pre-rolls, we cover traditional pre-rolls, and then flower category. And ultimately, those are very fluid and very dynamic segments. So we've touched over 500 stores. We're in 6 provinces. We essentially have distribution hubs in each of those provinces. So for example, for Alberta, you have to be AGLC approved. You have to have a local distribution hub that which the storefronts can then order from the province, just like British Columbia and Ontario. So it's a difficult space to navigate, but if you have good partners and you have the ability to be nimble and to quickly adjust. So if we have a product that's doing really well and we want to call up the supplier and say, okay, we're going to double down or triple down, we have that luxury. If we want to just stop a product, we have that luxury. Whereas if you are XYZ LP and you just have a brand new, amazing genetic that comes in, you've now got this harvest coming down, every 12 to 15 weeks. You can't say no to that. You can't stop that. And if you need double it, you can't get it because you can't source it. And if you need to switch it because all of a sudden the province wants a different strain, you don't have that luxury unless you rename it, which is very common practice as well in the space. So ultimately, it's very, very early days. We're cognizant of that. We are cognizant of the losses that are still taking place in the space, and just trying to be good stewards of the capital, a little bit of capital that we have. We have self-funded, so we raised about $2.5 million internally. I myself, actually a little more than that now. I've got a little over 2 million of hard capital in the company. Mark's got about 1 million. So our conviction level is high. Our belief is high. We are aware that we're probably still early. We actually took the company public in September of 21, and I thought we kind of timed the bottom, and we were still about 2 years early in that time. So ultimately, we've got a clean vehicle with a tight structure where the money was raised a lot higher. There's no cheap paper. There's none of these debentures that plague the space. We don't have any lease agreements. We don't have any management contracts. So in other words, we can go do a bigger, acquisition. We could bolt on smaller businesses potentially. We could change the innards and the shape of the company. So we're still, I guess, hyper aware that it's a fluid environment and we want to have something that's investment grade. And while it's still a tiny business on our side, we're proud that we're not lighting money on fire. And the money we've raised, we actually have a heck of a lot to show for it, which I'm quite proud of. But I do believe that the glory days of that industry are still in the future. And I hate to say it this way, but everything's been kind of practice to date, because nothing, ultimately, when you really look back on an ROI perspective or a lesson learned perspective, it's almost like we're still at go. We're still at day one in many respects.
Yeah, I guess sort of looking back upon it, some of the capital destruction that we've seen has been a little difficult to stomach from, some investors. I'm sure we would have liked to have had, even 1/10 of the capital that sort of got obliterated, during all of that M&A and that sort of insanity wave that sort of happened. But in terms of the sector today, these stocks are becoming popular again. We're starting to see, high volume, big price appreciation. A couple of stocks have moved several 100% moves here the last couple of weeks. What are your sort of thoughts on some of that? Why the movement, and what do you say the best times are still ahead? What would sort of trigger some of those?
Yeah, great question. So a few points. So the pendulum, as you know, it always swings too far in the capital markets. So we had a true bubble brought on by Bay Street and House Street mania. That bubble moved things way too big. That bubble burst in 2018, essentially, with the event of legalization. It came down and it eroded those market caps so dramatically that little spring has coiled up, and they've been waiting to then bounce back and recover some of that lost market cap from that overswing of the pendulum. So I believe, let's say the last 10 days, if you look at a Canopy or an Aurora, Canopy was $375 10 days ago. I think Aurora was about $4. Look where they are today, both over 10. So $1 billion+ of market cap has been restored. Promising. The reason why, I would say threefold, I guess. Canadian reform, finally, they're going to start to go after the black market, the medical market. The legal market is competing with a very, very robust, very established black market that is very much alive. So let's say it's conservatively half Canadian sales. It's actually more. If that half transitions over to C45, to the legal realm, in theory, you're going to get a doubling of top line across the LPs over the next 4 or 5 years. That's very, very bullish. They're also going to reform excise stamp issues, which is beyond devastating to the space. The way it was done at $1 a gram is not at all conducive. It didn't make any sense in the beginning. It never has. So they're finally rectifying that. At the same time, Germany announced legalization, which is big, and I think one of many dominoes to fall. And then the big one is U.S. descheduling and the Safe Banking Act. So if you think of MSOs or Curaleaf, TrueLeaf, any of these big U.S. guys, they're operating in a federally illegal environment. They don't have the ability to write checks. They don't have the ability, because of 280E, to write off CapEx or packaging or employees. So there's no wonder there's no real real profitability, not just adjusted EBITDA, but true cash flow.
Mm-hmm.
So let's say Biden wants to steal the election. He could, like Trudeau did, he could probably announce legalization, not legalizing, but even a deschedule from Schedule 1 to maybe 2 or 3. That would open up the entire industry in the United States. It hasn't even begun yet. So I'm really encouraged with what we're seeing. I like to remind people that believe it or not, this sector brought out more retail investors than anything ever in the market. That's a true story, whether it was GameStop, Beanie Babies, Tulip Mania. It actually brought out more mom and pop people like me, people like retailers that were just outside working class. It brought out more than anything else. So those folks are still out there, but they're waiting for an excuse to get back in because the sector behaves so badly. They rightfully have stuck their nose up for the last 5.5 years. So it's been a long time coming. I'll finalize it by saying, something I once heard, I think it was actually from that movie, The Gentleman, if I'm not mistaken, a Guy Ritchie movie where and it's a true story, Google it.
Yeah.
1933, they repealed alcohol prohibition, and it was about 10 years before the legal market was in control, because for the 6 or 7 years where booze was illegal, everybody accustomed themselves to going to the illegal gin joints and going to the speakeasies and getting the illegal Canadian whiskey coming down and the bourbon from the backwoods of Tennessee. So it took a long time for people to go back to the legal troughs. Now, cannabis hasn't been illegal for 6 or 7 years. It's been demonized for 75 years. So it's a plant that has a major stigma. And I think it's going to be a generational stigma. So I think it's going to take a long time for it to be normalized. But what I mean by that is that nobody missed anything. We're in the very, very earliest stages. It's going to be if my prediction is if the US were to deschedule and take it out of that Schedule 1 category so they can now get banking and traditional everything, that we'd have a 10, 20, maybe 30-year boom of this industry. And I think there's a lot of folks that would love exposure to it. I think it's got a big fan base that would love to invest in it. A lot of people that would love to work in the industry. I talk to them every day. So, it's a real thing. I can't help but think that the overall trend of alcohol is dramatically diminishing, not just amongst guys our age, but certainly my kids' age and the kids in their 20s are way smarter than we were. So booze is nowhere near as dominant out there. Now you're seeing people with their vapes and with their gummies and all the best to them, because there's ways that they can enjoy their vices without it being a neurotoxin and destroying every cell of their body and their mind and their soul, like booze can do to so many. So I think it's just getting started. And I think that was the 3 reasons. Sorry, it's a long answer, but a lot happened in the last 10 days, and I can feel it in terms of not just the M&A combos we have, but frankly the retail audience that has reached out to me in the last, I'd say, 12 to 15 days is legitimately more inbound queries that I've taken in 2 years, and that's God's truth. So something's happening in the space in the last 2 weeks for sure.
So just talking briefly about BC, I was going through some SETI reports. What percentage of the current sort of issued and outstanding does management insiders own?
Too much. More than we've been quoting 70. It's more than 60. I'd have to get back to you on that. It's upwards of about 70%, maybe 60%. I'll find an exact number for you, but it's a lot. And the reason being is, again, when it went public in September 21, there was no audience, and we weren't going to go promote. We weren't going to go try to do a retail round. Instead, we just stuck the bid up and said, okay, hit me. And the market did. And it hit all the way down from 25 debut, I think a bottom of about 2. So ultimately to say, we are the supporters of it to a fault. We'll continue to support it. During the time when nobody wanted to be a part of the space, we gladly put our hand up and said, hey, this is our vehicle. This is what we're going to use to ride out, to be the phoenix, to ride out the good 10 years after the 10 bad ones. So we've been the biggest supporters. We'll continue to be. And as a result, the 4 founders are at least 60% of the total float of about 55 million shares out. Actually, so probably closer to 70%. Which is unusual and great. And sometimes there is such thing as too much insider ownership, and you can fix that with doing retail rounds. So I think we're in a good position here. Again, we have been the ones to finance it. So I think if anything, it's good for people to know that this is something we're building. generationally, this is not a Vancouver moment. This is where we placed our bet in this sector. And this is our horse that we're going to ride, for the next 10 years. So yeah, we own a lot of it.
You call yourself an acquisition entrepreneur, amongst many other things. What does that sort of mean? Can you explain that?
Yeah, definitely. I read it first, I believe it was a book of the same name I read many years ago. And when I look back on my career, it was really a career of finding amazing companies, concepts, brands, or people and investing in them and saying, I'm not the smartest guy in town, but I've got a great nose. I'm a great bullshit detector. So whether it was Supreme, Aurora, TGIF, VC Budco, which was not mine, it was founded by Josh Taylor. These are all companies, same thing with Numinous, same thing with so many companies that I've been so blessed to be a part of that I just knew was a special moment in time. And I said, hey, I'm not the guy to run it, but I certainly can be of help. How do I cut a check, sort of earn myself a seat at the table? So it's almost akin a little bit to, like, to give an example, I suppose, and this is a horrible example because everybody talks about Elon Musk, but, he bought a Tesla and loved it and thought, geez, I could really do something with this. So he cut a check and he bought into it, and then the rest is history. So that would be an example of an acquisition entrepreneur. There's startup experts, and I've started a lot of cool companies, and starting a company from go, of course, is risky. Starting a restaurant from go is risky. I much prefer finding amazing athletes, aka entrepreneurs, that are willing to die on the sword, that have an amazing idea, and more importantly, have timing. So, like I always tell guys, that real estate, where it's location, business is very much timing. So if we get a little bit of a tailwind, a new exciting thing, somebody who's dedicated to doing it, a little bit of capital, that's an amazing opportunity. So I pride myself as an acquisition entrepreneur because most things I've been involved with the last 20 years, with a few exceptions of the ones I started, were really great ideas from other people that just needed that early angel investor to give them that first 100, 200,000. And then from there, we sort of open up the Rolodex and see where we can go and give it a 5-year shot. But yeah, that's really where the concept comes from.
And what's some of the criteria that you look for in a potential investment or acquisition?
Yeah, well, first and foremost is a absolute stud of a leader that is completely sold. So someone that doesn't have a plan B, somebody that's gone all in. That's my first big checkbox, is somebody that isn't doing a side hustle. That's the first thing I always ask every pitch is, what percent of bandwidth does this eat of your day, of your month, and of your year? So somebody who is fully prepared to give the next 10 years of their life to something, that's by far the first for me. It has to be something that I can quickly and easily surmise in like 30 seconds or less a thesis as to why it makes sense, so that I can very easily remind myself in 10 or 20 words why this is something even worthy of paying any attention to. There has to be an opening in the sky. So if that means that the FDA just cleared MDMA and all of a sudden there's an opportunity to be in the clinic business, there's kind of an opening. So you have to kind of have those little bit of a window. But first and foremost, it's the individual for sure, because they can handle adversity. They can deal with whatever life throws at them. And then, I like being on the cutting edge. So I was very lucky with blockchain early on, very lucky with psychedelics, very lucky with all sorts of different things, even uranium before it was really topical. Silver I've been shouting about for 25 years. It's now the only thing you see on Twitter today, which feels really cool.
Yeah.
But
we're having a day. We're having a
day.
Everybody's a genius today.
Right? And it's real hard. I just reminded a good friend who's texting me, what do I do? Everything's green. This is weird. I go, take a breather, because when the market's up and everything's green, everybody thinks they're smart. And that rug pull can happen very swiftly. And you got to stop and go, well, if I sold this green asset today, would I want to go back into it tomorrow? Yes. Well, that's an investment. That's something you'd rather have the investment than the dollars you can pull back out of the investment. So I think it's always important to ask yourself, if there's a new exciting initiative and okay, if I cut a check into this tomorrow and the next day rolls around and the next day rolls around, am I going to be anxious for my capital back, or am I going to actually be anxious to hold some of that equity, right? And that's a good acid test for people to say to yourself, would you rather get liquid, or would you rather have exposure to this? And that for me is the first and foremost big qualifier. And I'll take it even one step further for you, for a rule that I have now that really has served me in the last 5 years. And that that is this, and that is that if I'm not willing to hold it for 100 years, I won't touch it. And as weird as that sounds, if I'm not willing to get into a stock and hold it indefinitely, I'm not interested, because I know that we're in a weird time globally. There's many unknowns. I've got a lot of time horizon because I'm fairly young, but at the end of the day, I want to be able to support something no matter what adversity sort of comes along. So if I'm not willing to want to own that over the cash that it took to buy it, then I don't want to own it. So I actually talk a little bit in the book where I say, people go, what the hell does that mean? Well, when you rent a car, you drive it around, you go about your business, you go back to the place, you drop the keys off, and you don't care about, you'll never see that car again. You don't care if the wheels fall off, you care not. You used it, you rode it like a rented mule, and you dropped it off. On the total flip side of that is you go and you buy a 1965 Corvette, you put it in the garage, and it's now a family heirloom. So that's how I look at good companies, is family heirlooms that I wouldn't want to go sell the Corvette, because what's the 80 grand worth, the 60 grand worth? You can't find a 65 Corvette, for example, right? So I really like to sort of use that analogy with respect to buying things that are dynastically held that you would want your kids to sell. And it truly helps, keeps you selective, keeps you high quality, and it allows you from getting spread out across all these, like, I've got ADD, like so many guys in this business. So if I don't have rules in place, I will be all over the map and quickly lose control over these 100 plates that I'm trying to spin. So I keep it very focused, 2 or 3 things max, see them through, give them 5 to 10 years minimum. If it works, wonderful. That's where wealth is created. And if it doesn't, you gave it the best you could.
Companies, what are some Canadian listed stocks that you might like and that you're biased about?
Yeah, and I am biased, and I'm a glutton for punishment, so I have major overexposure to micros. As first mentioned, I've experienced the face melting leverage that a junior can provide when you're in the right place at the right time. So I kind of keep the Eric Sprott philosophy, which is, spread your roulette chips across the table of a bunch of good, well-run juniors with good, capable guys that have done it before with a little bit of timing. 1 or 2 of them hits, it makes up for the 90 that didn't hit, frankly, which is a lot different than like a juicer approach, which is, get a hold of something, manage it yourself. So they both work. As far as names themselves, I mean, I do have a gold initiative in Newfoundland. I'm quite biased on gold in Newfoundland. There's been a significant uptick in interest from the Aussies. Most recently, they bought the innards of a company called Gold Hunter, which I was a co-founder of, which is ticker Hunt. That was a really
very cool.
Kind of a first whereby the assets of the company were ported into Firefly, which is ASX listed, and then the Hunt vehicle in CSE remains. So that'll go on to hopefully make some acquisitions. So definitely a big fan of what's going on in Newfoundland in general. Part of another company there called Golden Spike. Very risky because it's a phenomenal property, but it's helicopter only. So people need to understand the risks associated with really grassroots things. There's extreme upside and extreme risk. It's 11 out of 10. So definitely an eye on Hunt, on Golden Spike. It trades as GLDS. My own initiative there is Sorrento SRS, very grassroots as well, very, very early stages. Quite ambitiously buying a little Quebec copper play, which has been a lot of in the headlines lately, called Abitibi Metals, AMQ. Shout out to the Duluth boys that have done exceptional. They've actually, to be honest, they ran a clinic in juniors because in 5 months they took a 5-cent dormant, nobody looking CSE shell called Gold Strike, vended in an actual asset, a copper deposit from Quebec called the B26 polymetallic copper asset, many million tons of copper. Stock immediately goes to 15, 20, 25, 50, raised a bunch of money at 30, goes to 75, raised a bunch at, I think, now 50. So, here they are 5 months later, sub 100 million shares out, almost 20 million cash in the till, no warrants, and a phenomenal property to which they've drilled like thousands of meters of hole already. So there's a clinic that just took place, a really cool Canadian family doing that. That's AMQ is that ticker. And then I would honestly say, and it's really boring, but my big conviction holding has been that PSLV. I just like the exposure of without any mining risk, geopolitical or otherwise. I really like the exposure copper gives me. I like the be honest, it's the peace of mind it gives me. So when you buy PSLV, you actually, unlike SLV, you actually own segregated, allocated physical silver in a vault at the Canadian Mint. So if you put 100 grand in, you can literally call Sprott, it's actually through your broker, and they will physically ship you COMEX bars. You can actually get the 1,000-ounce COMEX bars shipped to your door. That's super unique product. So that's sort of been my big holding. That's the one that if I have a little bit of capital, I'll just sort of pile into PSLV. But I'm always keeping an eye open for good, well-run juniors. And yeah, I do have to a fault, a bit of a tendency to really focus on the sub 5 and 10 mil market cap. I think that's kind of my specialty. And more so selfishly, I think because I can bite off a big piece of the business. You can come in with $100,000, $200,000 and actually own a little bit of the company versus coming into a Newmont or a Barrick or a Kinross, and you can buy all the shares you want. You don't own any of the company. So I like, I guess, being part of the story. Been up close, like when K92 had its run from a nickel. Great Bear went up to $33. So when you get to witness those deals, frankly, it kind of ruins buying big market cap mining in a little bit of it. So I bypass the big miners, go right to the metal, and then for leverage, I buy the juniors that are still pre-discovery. And that's sort of my balance from a commodity point of view. And I guess that would really make up the brunt, aside from my BCBC holdings, of what I have right now.
And just in terms of, again, part of like who you are, and I think what your peers would sort of say about you is that you know how to spot trends early. How do you what do you do to sort of spot trends? How do you identify them? You've talked about wanting to own something for a long period of time, or that spot like to spot people that have good timing. How do you spot trends?
Yeah, you know what? I'm a true contrarian. I'm almost, as my wife calls me, I have oppositional disorder, meaning to say that if Bitcoin is super popular, you're not going to see me in Bitcoin. Just plain and simple. That's it. I was a big fan of Bitcoin until around 2018, until it became a cult. And around 2019, it became a cult. So it went from
Right.
incredible.
You and your brother have a bit of a bet, don't you, about Bitcoin versus physical precious metals?
We do. We got about a 20-year bet going. I'm going to buy all the silver I can. He's going to buy all the Bitcoin he can, and we're going to see where we land when we're 50. So we'll see. We'll see what happens there. But that's, case in point. It's in vogue. It's kind of like when you're a kid and you discover Nirvana and they're the greatest thing in the world, and then they go mainstream and they're on MTV, and you're like, oh, I don't really care so much about them anymore. So I've always had that approach to investing. It's really, really served me. I mean, I look at the year of 2023 last year. I honestly bought uranium all year. Uranium was $50 a pound last January. So another Sprott product, you can buy it any way you want. I like buying direct metal. So I bought the Sprott U.U January, February, March, April, all the way to December. I think it was about $90 in December. I got out completely. By January and February, all everyone was talking about, if you remember this year, was uranium. If you go to VRIC and PDAC, it was all uranium. I was completely out. And by January of this year, I'd shuffled all the way back into PSLV because no one in the world could be bothered with silver. I talked to Rick Rule at VRIC. I said, what's your uranium today of your last year? Like he even said last February uranium. And of course, this February uranium had doubled in the last 12 months. He looked at me and he goes, well, I like silver. You know that? I go, perfect. That's exactly my thesis right now, is that nobody cares. Nobody bats an eye, and the price is completely dormant. There's no reason to buy it other than the fact that, what did Buffett say? Be fearful when others are greedy and be greedy when others are fearful. So if a crowd is running into a room, you're going to see me going out and vice versa. So last year was an amazing uranium trade. I got out early because I knew that I had already made my gain. I parlayed that successfully into another dormant vehicle, which is silver. I think silver is going to be a big story this year. And then, I kind of missed the oil trade. I've been a huge oil guy forever. I think as long as you and I live and eat and drive and wear clothing, we're going to burn oil. So simple, right? And if ESG and DEI and global issues continue to poo-poo on oil and gas production, I'll keep buying it. So definitely a fan of oil and gas, definitely a fan of gold and silver. I don't touch crypto. That's just personal. It's only because it's become a plaything, and I don't do playthings with real money. So yeah, I really like to be where not only do I have a high level of personal belief, so I can, in other words, I can sell myself on why, and no one else can see it. That to me is a good investment.
Well said. On that note, do you have any advice for aspiring entrepreneurs and investors who might be just starting out in the small cap space?
Definitely. I would say, as I said earlier, kind of stay curious. Curiosity creates connection, as the saying goes. So seek out other people that are doing what you want to do and don't be afraid to ask them questions. When you're genuinely curious about a topic and you ask somebody sincerely, they tend to give you an honest answer. And when you get that answer, that's a lily pad to the next place and the next place. And when someone says, I'm going to make an introduction to you to somebody else, thank them graciously, take the introduction, meet that other person, and just really keep kind of a student outlook. Um, sorry. And just, always be reflecting. So I'm a fervent reader. I read and I journal every single day. I would say get your hands on all the money books you can. There's a ton of them. YouTube is an absolute gold mine of terminology and information. So always be hungry for information, be curious for information. And lastly, I would say, and this is going to sound funny, but if you want to be an entrepreneur and you want to be successful, try getting up at 5 a.m. Because I look back on my life, ironically, it's a funny side note, but when I look back at the periods of time where I got out of bed really early, I kind of met the day ready. You start with, you don't need the cold plunge or whatever, but if you get out of bed early and you kind of meet, because here in the West, the market starts loud and early for us at 6:30. We don't have the advantage of the guys in the East. So always the periods that I got up really early and really got my shit together before the bell, I had phenomenal days, which turned into great weeks, great quarters, and you end up having a great year. So the first thing I say to guys, and it comes as a shock to a lot of people, I say, what time you got out of bed? They always say 7:30 and 8. And I go, have you ever tried getting up earlier? They go, no. And I go, just try it. It will change your effing life. So seek mentorship. I think all men need to be mentored. They need to mentor others. They need to be in the trenches with other men. But you definitely got to stay hungry. And to do that, you got to get up before everybody else. And you got to get ahead of the day before it kind of gets its arms around you. So look, in hindsight, that was certainly the big one for me was getting up early, journaling, and then really just not taking advantage or not taking for granted your Rolodex. Like me knowing someone like you is so valuable. I can pick up my phone, I can call you. What do you think about this idea? What do you think about that idea? That's a very
Yeah,
valuable thing.
Please call. We don't talk nearly enough.
Yeah, and another thing that was just said I thought was so cool. Someone said, what's the most potent market tool you have? And he pulled out his cell phone. This thing. I can call 1,000 different guys in the market and pick their brain. That is due diligence. That is power. That is, an analyst sitting in an ivory tower with all the spreadsheets in the world doesn't have the ability to just pick up the phone and call the CEO and get his opinion. And I used to always ask guys, these two qualifiers. I say, what are you most excited about? What keeps you up at night? And that for me was an easy gauge of like, where are we, whether it be their business, whether it be macro, and just stay hungry, stay engaged, and use your 2 ears and your one mouth proportionally, I guess, as the old saying goes.
Hey, excellent. I think we've covered a lot of ground there, Brayden. I appreciate it. Is there anything you'd like to sort of leave us with? Any last thoughts? Anything that we didn't cover that you'd like to cover?
No, I don't think so. I think I'm living proof that I've had a little bit of success in the market, not for lack of trying and working very hard, but I was a true outsider, right? I was never a stockbroker or a banker, and my dad or my uncle were not in this business, so I truly, for lack of a better term, I kind of infiltrated the capital markets business as a retailer. So my point being is that no matter who you are, where you are, you can be part of the business. You can get more involved if you're interested. You can take a deal public. You can sell your private company to a public company. The sky is the limit. There's no barrier to entry in this thing. So just, don't be afraid to get out there, call the companies, go to the events, and just immerse yourself. Because if you want anything, you can get it. But I am definitely living proof. And that's why I wrote the book, was to say I'm a blue collar tradesman. And I started life out, doing all the different trades. I didn't get any education formally. I didn't get any inheritance. Didn't really have any guidance even. But I stayed sort of thirsty for more knowledge and a better life. And I think anybody that wants it can get it. So never let your your disabilities or your lack of experience prevents you from going out and getting what you want.
Hey, very well said. Great way to wrap up. Well, Brayden, I really appreciate your time. Thank you very much for sharing that with us. And everybody, make sure you go out and check out his Substack and go get that book. And anyways,
And I
have a
guess,
great day.
and then on Twitter at Brayden Sutton, easily accessible. And truly appreciate you having me here. It's been an awesome convo, and appreciate your time immensely.